Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast. Another video episode for you. So if you want to strangely see me very zoomed in and up close and personal, head over to YouTube or Spotify. But of course, you can also listen to this on your favorite podcasting app as well. In today's episode, we are going to tackle one of the toughest transitions in trading, the gap that needs to be bridged, which many traders fall into instead of actually bridging it, and that is going from pretty much anything prior to live trading to actual live trading. If you guys are brand new and you haven't made it to that point, you're probably asking yourself, well, what's the difference between backtesting and demo trading and live trading? And the answer is everything, because that's when we become humans. That's when everything else starts to take control, and that's when we get very tempted into making poor decisions. I'm literally talking to a trader right now on the tier 1 trading platform where we're talking about an idea, and he just said that he noticed that he can be good and stick to his rules for about a week, but then if he doesn't get any signals, he gets itchy, and that's when he feels those emotions and those kind of negative temptations start to kick in. So today we're going to pass along some advice from my personal trading journey, some of the stories that I've learned from some of the most successful traders that I've worked with over the years, and hopefully it gives you some options that you can try out so that way you can be someone that bridges that gap successfully instead of falling into your death. Maybe not that morbid, but yeah, you get it. Anyway, before we hop in, real quick, do me a favor, hit that like button if you're watching this over on YouTube. If you're watching this or listening to this on a podcasting app, make sure you follow the podcast. Only about 52% of you that listen to this show are actually following. So if you're going to listen to it anyway, you might as well hit that follow button. That way you don't miss future episodes. Do it. All right, let's hop in. Before we get into the live trading, let's talk a little bit about the journey that a trader must take before they can get to live trading. The first step of the journey is just learning, right? Learn about the markets, learn the foundational principles. If you're a fundamental trader, learn about fundamentals and news events and what they mean. If you are a technical trader, learn how to read a price chart, learn about orders, bid, ask, markets, stops, right? Limits, all those type of orders. Learn the skills that you will eventually need to do anything else in the market. After you learn that, you go on to learn a strategy. We call this the strategy development stage. Now, you can handle the strategy development stage in a few ways. You can be someone that develops their own strategy, meaning that you take the skill of what you've learned in the previous section and you start creating things, right? This hypothesis of what you think should work. You could be someone that just steals a strategy from a book or somewhere on the internet and takes the time to make it their own, meaning you take the base idea of it and you start adding your own tweaks and filters. Or you could be someone that just takes a strategy that already exists and religiously follows it. It doesn't really matter what you do. Throw your ego out the window and just worry about what makes you money and, of course, what can mesh with your personality, because that's going to come into play later. After you've chosen or developed said strategy, the next step is going to be the testing phase, right? We're going to keep it short by calling it the backtesting phase, but it really is a multi-level testing phase, which eventually ends with backtesting. And backtesting essentially is taking your hypothesis, taking your strategy, looking over lots and 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 lots of historical data and proving that your system has an edge. It just usually isn't a one-time deal. Usually you go through, you have questions or you develop questions, you get those questions answered, you tweak and filter and stuff like that. Imagine like Thomas Edison making the light bulb and the millions of times that he failed before he finally got it right. But eventually when you pass the backtesting phase, you have something that works and doesn't just work for a short period of time, but works over a long period of time and various market type of conditions. After you've graduated that, then it's to the demo and paper trading phase, because it's one thing to be able to identify something in the past when there's no movement on the chart and you can kind of scroll back if you miss something. It's different to be able to recognize it in real life. I can tell you what, there is a massive difference when you are staring at a chart full of candles and whatnot versus a chart that has the open black, white space, ocean, whatever you want to call it. And what I mean by that is when the future hasn't happened yet on your screen, so it's just emptiness. Again, it seems weird, but for those who have actually stared at it, it drives people insane, the difference between having a full chart where you can go front and backwards and kind of peek and see the result versus having nothing there. After you've passed this stage, and this stage is to make sure you can identify things correctly in real time, it's also for you to get practice with your orders and your stops and making sure you do that the correct way, but also in a timely manner. The step after that then is live trading, and this is where things get funky. There is something very specific that is introduced in live trading that you will not experience in any of the other stages I mentioned before. We can simulate it, we can be prepared for it, we can tell ourselves it's coming, but you don't really feel it, right? Wolf of Wall Street style. You don't really feel it until you're actually doing it, and that is having something at risk. Up until this point, we have freebies, right? It doesn't matter what we do in the market. It doesn't hurt us in any type of way. Maybe it hurts your ego because you lost and you feel bad, but it doesn't, whatever, that recharges, right? When you're trading live money, you actually have something at risk. You can lose something in the market, or you can potentially gain something real in the market, right? Either side of it. And those type of stakes have a different type of influence on us. They cause us to do they cause us to do silly things, as the trader just mentioned over there. Sometimes we get the itchiness of the fingers because of that. So in order to handle this situation, there are a few tips that I can give for you. One, we need to warm up before we trade, right? If you guys have ever played sports, I coach athletics, so track and field. The first thing we do every time we meet for practice is we warm up. You look at any professional athlete, whether they have bands or they're jogging or they have someone stretching them out, they are doing some type of warm up. If you think you can just run on the field when the whistle blows and go from 0 to 100, you are going to either A, hurt yourself, right? Or B, just not be at your optimal level. The same thing's in trading, right? I say this all the time about my double wake up, right? For many years in the past, when I wasn't treating my trading like a business, it was just like a hobby, and I'd roll out of bed and hit the charts. What I found is that my trading sucked, mainly because I wasn't awake, I wasn't prepared, I was kind of going in cold turkey, and my results were negative because of that. So for trading, it's important that we warm up the eyes, we warm up the brain before we get into an environment where we have live money at risk. So what is this warm up? Well, yeah, you can stretch, you can do eye exercises. For you guys that are blind like me, eye exercises, I don't know if they actually work, but my eyes haven't gotten worse, knock on wood, in the last 7 years. You can try that as well. But we want to do exercises on the chart, so visual rehearsal. So I'll give you an idea of what I do. So when I used to day trade, so think about I would have an active trading day from pretty much 7:30 a.m. in the morning to about 10:30 a.m. in the morning, about a 3-hour period. Now, I didn't just jump in and start day trading. What I would do is I would do a pre-market analysis before my day trading day started. So around 6 o'clock or so, I would go through the markets. I would do all of my analysis. I would see, what's happening? What did the European session do? Oh, London traders, you guys are crazy. Oh, we're trading here, we're trading there. I'm taking notes, I'm journaling, I'm marking up my charts. I'm not actively trading yet unless something comes from a swing trading perspective, but that's already rehearsed from the previous night. But I'm just making my observations, taking notes. Hey, make sure you pay attention to this. Make sure you pay attention to that level. What news events are coming out? Then I go and do some other stuff for an hour. Usually it's, eat breakfast, get the kids ready for school. And then I come back for my day trading day and re-look at all of the charts. Now, yes, this is repetitive, but when I re-look at all the charts, I see it in a different way. I'm already warmed up, right? I'm not just going out there in the court and taking my first shot. I've taken hundreds of shots already, and now my form is on point because I'm warmed up. So I go into a chart, I go into the euro dollar, I know what I'm looking for, I know what to expect, I know my key levels. Because all of that has already been done, it doesn't require as much of my attention, which allows the attention that I do have to now be focused at kind of more specific things in the market. We always talk about trading is about really seeing through the junk, right? Trading is like a magic show where there's all these bells and whistles and all types of weird stuff happening. And most of the stuff that happens in the market is simply there to confuse you. But the good trader is able to kind of ignore all the noise, focus on their focus, the thing that actually matters, and then extract profit from the market that way. I apologize if my feed is a little riggedy. It's, internet's been on and off for the last couple of days. But, having that warm-up session, that rehearsal, allows me to be that much more sharper when I go into the market. So that's one thing I recommend that all you guys do. The next thing is rehearse with the right intensity. This goes back to the Trading Coach podcast where we spoke about Mike Bellafiore and one of his super traders, and they say that, hey, they don't just go through the motions, they do things very intensely. Well, here's the deal. I told you there's a big difference between paper trading, demo trading, and live trading. And the main difference is because there's something at risk in live trading. And honestly, there's no real way to simulate that psychological battle. We can do all the back testing we want. We can do all the demo trading we want. But at the end of the day, we're not going to feel it until we actually feel it. So the question is, how can we put ourselves in a position where we come as close as possible to feeling it? That way we can train ourselves and be more prepared when we actually do feel it. Going back to the sporting example real quick. Again, I coach athletics, track and field, right? We've had a very good team. We've won lots of trophies over the last 10 years. And one of the main compliments I get at all of our championship meets are like, hey, Akil, your girls always seem ready to go. Like certain people, some of the front runners, sometimes they underperform because the pressure gets to them. Some people break down, but your team always seems to step up. Why is that? And years ago, we started training at an intense level, right? There's two ways to train. There's intentional training, so let's call it educational training, where we're working on something. So I may have a group, I may give them a workout, and we're looking at video one-on-one, we're trying to correct an action. This would be similar to like someone training their eyes on the chart, where if you're practicing head and shoulders, right? You're going back to historical data and you're just trying to find as many head and shoulders as possible, right? For you guys that are on the Tier 1 trading platform, at the end of each of the training courses, this is the action items or the homework that we give you, where it's like, hey, go find 10 double bottoms or go find the ascending triangle, right? There's no pressure there. You're just trying to familiarize yourself with a pattern and just work on your recognition skills. So the same thing with track. We're trying to work on form. Do this with your arms. Do this with your legs. Land in the sand this way. That's one way, and that is certainly needed. But that's not necessarily going to help with high pressure situations. So what we also do at our practice is I will put people against each other. We will race all the time at practice, whether you're racing your teammates, whether you're racing the clock, whether you're racing something else, but it's some type of high pressure situation. We see this in professional sports as well with field goal kickers or penalty kicks, where in training practices, training exercises for these teams, when they train penalty kicks, they don't just sit there at the spot and kick it. They're blasting music. They're putting something on the line, right? I've had situations before when I played football where we were practicing high pressure kicking situations for our field goal kicker. And so what we did was we put the ball there, we all yelled and shouted, and if the field goal kicker made it, then the offense didn't have to clean up. We didn't have to do anything extra. If the field goal kicker missed it, then the offense had to clean up practice and do some type of like punishment. So you can imagine that the defense is trying to rile up the field goal kicker because if he misses it, they don't have to do anything. The offense, we're kind of hyping him on, and because if he makes it, we don't have to do anything. And this poor field goal kicker is back there feeling the pressure because he's going to let someone down. But the point of that is to simulate what it feels like at the end of the game, where if you make the kick, you're a hero to some. If you miss it, you're going to let someone down. And giving them the ability or the opportunity to train under that pressure allows them to adjust and adapt, right? You see the same thing with professional players where their first time getting on the field, they're a nervous wreck because it's their first time. They never played in front of 60,000 people. But then when you're a chiseled 10-year vet, it's like, I've done this before, not a big deal. So with all that being said, right, how can we do that in trading? Do we need to hire a bunch of people to stand at your computer desk and like cheer and yell mean things at you while you're trading? Perhaps that could be a business idea. Let me write that down. I don't have any of my journals near me, but keep that in mind for later. We just get a group of people, we travel around to different traders' houses and just yell at them while they're trading to simulate pressure. Hey, there have been weirder things that have made money, so why can't that make money? So let me jot that down real quick. Don't you guys steal my idea. Don't you do it. But another way we can do it is this. So let's talk about, we'll talk about two ways to do this. We'll talk about positive reinforcement and negative reinforcement. Let's start with the positive reinforcement because this is, I don't want to say it has the best result, but being a parent, they told me you're supposed to do more positive reinforcement than negative reinforcement because psychologically it has a better longer term effect versus people being scared to do stuff. So we'll start with positive reinforcement. How can you reward yourself for being a good trader, right? Because at the end of the day, if you are a good trader in the live markets, you get rewarded with profit. We like profit, yay, that's good. So how can we, during that demo trading and paper trading period, reward ourselves with something similar if it's not actually coming out of the market? Well, if you're good at budgeting, you usually have some type of allocation to like fun money, whether it's something that you're allowed to spend, you buy yourself nice things or go on vacations, whatever it is. You can reward yourself based off of, or use that count, I should say, to reward yourself, right? Because again, when you are doing actual trading, you're getting rewarded with money from the market. When you're demo trading, how can we manufacture that? Well, you can do it by rewarding yourself with money just from a different place. So if you have a good trading week, if you have a good trading month, you're allowed to give yourself X amount of money to pay yourself with. And that money could be used for your personal enjoyment, whether you want to go see a play, whether you want to go eat at your favorite restaurant, whether you want to buy yourself something. You're not allowed to do that thing until you get the money from that spot, which is given to you because you trade it well. I made that a lot more complicated than it should be. But again, I record these things live with no rehearsal, so I just spew at the mouth, but hopefully that made sense. Essentially, you are giving yourself a gift, right? And that is your way of positively reinforcing yourself for a job well done. So if it's something that you really want or something you really wanted to do, there is going to be a little bit of pressure when you're trading, paper trading or demo trading, because if you want this thing bad, you know that your ability to get that thing is directly related to how you trade in the markets. Again, it's not the same as the live money, but again, we're trying to manufacture something as close as possible. The other one would be negative reinforcement, right? So positive reinforcement is giving yourself something. Negative reinforcement is taking something away. Now, again, I think the science says that this has a worse longer-term effect because maybe it's just on kids. We get psychologically messed up and we're afraid to take risks and we don't want to lose stuff. But in the short term, I like negative reinforcement, right? I am fueled by fear. The reason I am motivated and have stayed motivated over all of these years because I am afraid. So if I know that something is going to be taken away or I can lose something, that actually motivates me to do well. Maybe it's the sports person in me. If I don't do well, I lose my spot. But we're all a little bit different. Got to find out what works for you. So again, going back to the budgeting thing, right? If you're going to reward yourself with kind of the fun money for doing a good trading job, the opposite would be for your negative reinforcement. If you do a bad job at whatever you're doing, maybe you have to remove money from that fun money and put it back into somewhere else, a college education for the kids, somewhere you don't want to put it, right? Or maybe you take something away. Maybe you're supposed to go out to eat, or maybe you're on a diet and you get your cheat meal, which is a delicious dessert. Well, maybe you no longer earn that because you didn't do it in the market, right? Something that is going to be a little bit painful, but not end of the world painful for you. A great story I once heard from a trader I worked with is, I don't know if he regrets this or not, but he did this with his wife, where he said that if he had a negative trading month, and I'll explain a little bit later how we judge negative, he would have to buy his wife jewelry. And he turned around his trading as quick as possible because he started off bad. He was a rule breaker like many of us. And he was buying his wife necklace after ring after earring. And it started to hurt so much that he said, I've got to start following my rules, because even if I lose money in the market by following my plan, that is going to be less expensive than what I've been buying my wife over the last few months. So again, great story. It worked for him. He turned things around pretty quickly. So that brings us into our next point with the wife, right? That's accountability, right? Whatever you do, whether it's the positive reinforcement or the negative reinforcement, you have to have some type of outside accountability. Now, Some of us are really self-driven. Some of us are really good with internal accountability, where it's like if you tell yourself something, you're going to do it. You're not going to deviate from the plan, and you're harsh with yourself, so you're going to follow it. Others, we're kind of the opposite. We won't do something unless someone is watching. Speaking of conversations on the platform, there was one yesterday where a trader was sharing these awesome ideas, and he's been doing a really good job at sharing like ideas on the chat. And one of our traders asked him, "Hey, did you start backtesting yet?" And he's like, "No." And pretty much they confronted him. They're like, "Hey, like you've been sharing all these ideas for a while. Like, when are you going to stop procrastinating and start backtesting?" And I didn't see the whole conversation, but apparently one of our traders DM'd this other trader on the site and then came back to me and said, "Hey, we found an agreement. Blank trader is going to start backtesting, and he said that he's going to have it all done by the end of the year." Now, I don't know how he got him to do it. I don't know if there was any type of physical threat there. I don't want to know. That's how I keep my plausible deniability. But all of a sudden, this trader has become highly motivated to get the task completed. Hope that doesn't go bad. But by any means necessary, right? Any means necessary. Anyway, we need to have that accountability to really get us going. And that accountability can come from anywhere. It can come from a partner, husband, or wife. It can come from maybe a buddy of yours that knows nothing about trading. You're just like, "Hey, here's what I'm doing. Hold me to it." Your best bet is probably to try to find a fellow trader, just because they can understand the process a little bit more, and they can also be there for you to rant to when things are going bad, get excited with when things are going well, and maybe give you some tips on what you should be doing or how you've been doing it better. But it really could be anyone out there, but someone has to hold you accountable, and you have to be very specific with what those goals are and when those, the time segment in which you're doing it. Now, lastly, we've spoken a lot about performance and judging yourself and rewarding yourself or punishing yourself off of positive or negative performances. Well, up until this point, many of you guys probably are thinking positive and negative performances are based on your return on investment. They're based on your profit factor. That is going to be a big no. When we judge ourselves in these situations, it's very important. It's crucial, I would say, that you judge yourself off of the process. Remember, 4 types of trades out there. There are profitable trades, there are non-profitable trades, there are good trades, there are bad trades, right? A profitable trade isn't necessarily a good trade, right? You can do everything wrong and still make money. A non-profitable trade isn't necessarily a bad trade. You can do everything right and still lose money, right? What you want to focus on are the good and the bad trades, because we know that if we consistently take good trades, we give ourselves the best chance of extracting our edge, and our edge is what allows us to be profitable, bigger picture in the market. Now, why I say bigger picture is because it's hard if you're judging yourself simply off of profit, because hot streaks and cold streaks come in the market. I can take 10 bad trades this month and just the markets happen to be directional and I happen to be going in that same direction and I can make lots of money. The problem with that is now I associate making money with my negative actions, and then I want to take more of those negative actions because those are the things that made me money. And then when the market stops doing this directional thing, I get crapped on. I get destroyed in the market because I'm really just trading random stuff. It just happened to work within this short period of time. Again, vice versa for the other side. Sometimes you're going to have trades that just don't work. Market conditions are just going to rip you to shreds. We all go through drawdowns. You could be doing everything right, taking good trade after good trade after good trade, and it just happened that this week is just a stinker. This month is just a stinker. And we don't want to kind of give up on our system, our strategy, give up on ourselves just because of that short period of time. So this is why we want to be process-based. We've spoken a lot about journaling in the past and grading yourself on different aspects of your trade. You can either do binary, 1-0, yay, nay on good trade, bad trade. Either I, did everything I was supposed to do in my trade and made no mistakes. If you did everything you're supposed to do, good trade. If you made any mistake, bad trade. Or you can kind of take it to a deeper level where you judge yourself on different aspects of your trading. I hope I can find the podcast I did on that. But you're judging yourself on different aspects like, pre-market analysis, post-market analysis, active trade management, entry, stop, targets, and then maybe give yourself a percentage score where it's like, hey, when I add these percentages up and then I add them up, all the trades I take, if I'm hitting above 90% on the good trade meter, then that counts as positive, and then you would want to increase that each and every month. If you do, like, if you're hitting 90% on month one, the next goal is to be like, hey, 92%. That way you're moving in a positive direction, right? Various ways you can do this, but the fact is you want to judge yourself off of following the correct process, right, versus just the result or the outcome. Hope you guys enjoyed the episode. Before we go, I missed out on one point in the beginning where I was taking you through the stages of trading. At some point, you have to make a decision on a trading platform. And at some point, you have to make a decision on a device that you can use that trading platform on. If you're like me, you don't know much about trading computers and you want to learn more so you can have one built, or maybe just build your own, I've got a free trading computer guide that you can use. Just scan the QR code or check the link in the description box below. Just sign up. They'll send you all the information you need to know about what a trading computer should have, and it's 100% free. So do it. I've used them twice. I've been satisfied twice, so I pass it on to you. All right, until next time, plan your trade your plan, hit that like button, follow the podcast, and I will see you guys next episode.